After 20 years of helping people purchase real estate, one of the questions I often get is whether or not purchasing real estate is a better investment than buying stocks. To be honest, the answer isn't going to be the same for everybody. There's a lot of things that need to be considered when analyzing what makes more sense for you. In this video, I'm going to break down the things that I think are important when considering whether to buy real estate or invest elsewhere. Now, before I dive into all this, do me a huge favor. Tap that like button and make sure to subscribe to the channel so you get more content like this. So when it comes to what's better, I'm not a stockbroker, I'm not a financial advisor, by the way, I'm a mortgage broker. And although I might be a little bit biased towards real estate, I too am a consumer and I too invest in my future. And so I participate in all of this stuff. And these questions come up often when I'm helping people in their decision-making process. Now, on the surface, if you were just to look at the annual average rate of return that you could expect over time with real estate versus the stock market, an argument could be easily made that investing in stocks makes more sense. Like if you go back to 1957 and you look at the S&P 500 index and you just look at the average annual return on investment, it averages out at 10.15%. Whereas if you were to go back during that same time period and you were to use the Case-Shiller index, which is kind of like the gold standard for measuring appreciation, and you were to look at that on an annualized rate of return, it comes out to about 5.38%. So again, on the surface, it looks like stocks is like it's double. I mean, that's twice as good as what real estate is. But the devil is always in the details. And so there's a lot of things that need to be considered. So let's dive into those things. All right, so I think we all can agree that we all need a place to live. So first and foremost, I feel that you need to purchase your primary residence, because if you're renting, you're paying somebody else's mortgage, you're building somebody else's equity, you're paying down somebody else's loan. You're not getting the same tax write-offs as you would have if you owned a primary residence. So for that reason, my personal philosophy would be that you need to invest in yourself, invest in your primary residence before you start going and investing elsewhere. Now, by buying your primary residence versus renting, something else that you're doing which adds to your ability to be able to invest in the future is you're locking in your housing expense. You know, when you rent, your landlord, typically they raise your rent every year. In fact, if you look at rent increases year over year, it's pretty crazy how much rents have gone up. So when you purchase a home, you own your primary residence, you control your housing expense. And so if you can lock in your housing expense and you're not subject to further rent increases, that opens up the door for you to have more disposable income to invest in other things. So when it comes to cashing out, monetizing your stock investments, you can't do that tax-free. Whereas with real estate, there's a lot of creative ways that people can tap into their equity or sell properties without paying taxes. Go see refinances, cash outs, home equity lines of credit, 1031 exchanges, the IRS's primary residence exclusion rule. So there's a whole bunch of things where you can basically not have to pay capital gains or pay income tax on those monies that you make off of your equity, off of the real estate, versus if you were to buy stock and sell it at a gain, you're gonna pay capital gains tax. Something else that's a big difference in cost between stocks and real estate is that when you buy stock, typically most people, they're not buying stock with a loan, but you can, it's called margin. And if you buy on margin, it's expensive. And although there's a lot of people that do that, and there's some people that make a boatload of money, they're experts though. Most of the time, people are using their hard-earned extra disposable income to purchase stock. Whereas with real estate, with a mortgage, you can purchase real estate at affordable terms that make sense with a mortgage. Now, the thing that I like about real estate is it's also tangible. You can actually touch it, feel it. You know, it's something that you can see. So, you know, it's a mental thing. Whereas like stock, besides like maybe if you got like the paper stock, which, you know, who actually does that with stock certificates these days? I mean, besides from that, there's really nothing tangible that you can put your hands on when it comes to stock. And although I get that doesn't necessarily dictate the value or what's a better investment, but some of this is psychological and you got to be able to sleep at night. Speaking of being able to sleep at night, when you look at the performance of stocks versus real estate, stocks are going to have many more peaks and valleys versus real estate. Like if you look over that same period I was talking about before, back to 1957, 73% of the time, you have positive years. Whereas with real estate, 93% of the time, you have positive years, meaning your assets appreciated versus depreciating. Now, both stock and real estate are technically a store of value. One of the nice things with stock compared to real estate is that stock is extremely liquid. You can sell it immediately, whereas real estate, you could probably sell a house in like a week or something, but you're not gonna get the price that you want. You're gonna end up selling it at a fire sale price most likely in order to move it that fast. So depending on what your liquidity needs are for your assets, that needs to play a role in whether or not real estate or stocks make sense for you. Now, up to this point, when I've been talking about stocks, I've been mainly referencing index funds like the S&P 500. But with stocks, you can actually pick individual stocks. You can pick this company, that company, and only invest in that. And for that reason, stocks are much riskier than real estate. I mean, there's a million miles of separation between a winner and a loser when it comes to the stock market. However, with real estate, I mean, you really have to make a bad decision and purchase in an area where the whole economy falls apart, all the jobs leave town, and there's a collapse in the real estate market. That does not happen very often, whereas companies go in and out of vogue all the time. And a unicorn stock can easily become a penny stock over the course of a short period of time. Now, stocks have a lot of options. I mean, there's literally probably millions of options, whereas real estate, I mean, go look at the market that you want to invest in. There's probably not a lot of options. We have inventory issues. There's just not a lot of real estate, which is part of why real estate is such a good investment, supply and demand. We have a low supply and there's always more people, so there's always demand. Now, I had mentioned earlier that when it comes to real estate, there's a lot of tax advantages, especially if you're playing the rental real estate game. Like if you're pretending to be Grant Cardone or one of these other mega real estate investors, one of the reasons why they go so heavy on real estate is that they get to write off depreciation and use 1031 exchanges to not pay capital gains tax. And they do this wash, rinse, repeat. They buy an apartment building, they buy a duplex, they buy a single family residence, whatever it is. They improve it, they refinance it, they pull as much cash as they can out of it because a loan is not income, so you're not paying income taxes on that. Then they use a Schedule E on their tax returns to write off depreciation and other expenses from that rental property to further eliminate any tax liability. And then when they've sucked all the depreciation out of the property that they can, what do? They sell it, and they sell it using the IRS's 1031 exchange rule, which basically, if you follow that rule, you do not have to pay capital gains tax. And all they do is wash, rinse, repeat. Now, there's a lot of pros and cons when it comes to real estate and stocks, so you have to do what makes the most sense for you. Now, if you'd like to talk to my team about purchasing real estate so that you can figure out if those options make sense for you, click the link in the description below. We'd love to talk to you, have a free, no-hassle conversation, and figure out what makes sense for you. Now, if you haven't already, do me a huge favor, tap that like button, make sure to subscribe, and I'll see you on the next video.